We're here today to launch our May bi-monthly report, focusing on trends in the Northern Ireland property market over recent months and looking to the summer months ahead. We've had a very busy March and April in this particular sector, with continued activity, particularly the investment sector of the market, with quite a number of assets being formally launched for sale. In the first quarter of the year, over £58 million transacted in the investment space in 9 individual transactions, and there are several other large transactions currently in negotiations and likely to close over the coming weeks. We expect to see an increase in the volume of office investment properties being launched for sale. There is very strong demand for any office investment opportunities that are brought to the market in this sector, with particular demand for the Middleton building in Belfast, which is currently on the market. There is also continued appetite for retail property, obviously, and the Valley Retail Park in Newton Abbey is due to be launched over the coming weeks, guiding in excess of £6.5 million, and this is also likely to attract strong interest. Just as we're seeing in the Republic of Ireland at the moment, quite a lot of activity is occurring off-market, most of this coming in the form of secondary trading of portfolios that have traded in the market over recent years. So you have deleveraging coupled with secondary trading at the same time. Demand continues to mainly come from international quarters, although over recent times we have seen improved appetite from local buyers, particularly for lot sizes up to 10 million, and this no doubt has been aided by an improvement in debt funding in the market over recent times. Prime yields in the Northern Ireland market remain stable at present, but there is potential for office yields to contract a little bit further over the summer as new market evidence materialises and further rental growth is evidenced. Office occupier activity continues at pace. We had 2 very large lettings in the first quarter, namely a 21,000 square foot letting to PwC at the Waterfront building and 11,000 square foot to Rapid7, a technology company in Arnott House in Belfast, both of whom were very much welcomed. The recent announcement from Invest Northern Ireland that they will support the funding of Grade A speculative development in the Belfast market is particularly welcomed, because the devolution of corporation tax powers has now moved on to another stage, has been passed by the House of Lords, and we need to have office accommodation ready in 2017 when this change is likely to take effect. So this announcement has been very much welcomed in the Northern Ireland market, albeit it remains to be seen how it will actually work in practice and whether in time it will also apply to the refurbishment of existing buildings as opposed to being primarily focused on new build. Activity in the retail sector in Northern Ireland has also continued to improve over recent months, and there's evidence that it has started to filter out into regional locations and not just focused on Belfast and the major cities. Michael Kors and Warren James have recently opened new stores in Belfast city centre, with the latter reporting one of its best store openings in Castlecourt in recent times. Zara are currently in the process of fitting out a larger store on Donegal Place, and Gap are to occupy the former Eason store on this street, and their former unit in Castlecourt has already been pre-let. The rate revaluation, which came into effect on the 1st of April, has had implications for retailers across Northern Ireland. It has been particularly beneficial for high street retailers, leading to rate reductions in many cases. And indeed, Aldo have reopened the Donegal Place store that they closed in recent times, reportedly on the back of the rate reduction that they've received. That's not to say that some retailers have not faced increased rates bills, predominantly those in the retail parks and the outlying locations. A very good summer is in prospect, particularly in the hotel and tourist sector in Northern Ireland, with the hosting of the Tall Ships event in Belfast in July, and indeed the hosting of the Irish Open at Royal County Down, both expected to significantly boost tourist numbers and benefit the hotel sector in the market. A recent hotel sale, the sale of the Holiday Inn in Belfast to Delata plc, was deemed to be a very good transaction for the market, indeed one of the largest hotel sales to occur in the region in recent times. So all in all, it looks like a very busy summer prospect for the Northern Ireland market, with secondary trading and continued deleveraging leading to lots of investment opportunities coming available over the coming weeks and months.